Hello, everybody.
Hello, everyone. Steve, Scott, what's happening over there?
Monday. Hello.
Yes, and not your typical Monday, and of course we'll get into more
Interesting.
detail shortly. But welcome everyone to another edition of the Office Hours. I'm your host Jamie Hodge. I got Steve Gomez as always riding shotgun with me, and here we are, July 30th. Tomorrow's the last day, and then July will be in the books. On to August, and before you know it, the fall starts up. So, without further ado, let's get the legalese out of the way here, and just want to make sure everyone in attendance, and whether it's this webinar or any of the other 8 webinars that we host throughout the week, just want to make sure you know that all the info that we share with you is for educational purposes only. If you do need investment advice, you know, what to do, when to do it, all that good stuff, please seek out a registered investment advisor or another licensed individual that can legally help you out with that type of stuff. So once again, everything we share with you in our webinars is strictly for educational purposes only. All right, so since we do have some newer people more than likely in here from the test drive, other people in here could be kicking the tires. We always like to take a brief moment here and let you know that not only do we have the award-winning, one-of-a-kind scanning technology, but we've built quite the vibrant community around that technology. And up here is where it all kind of starts. And this is kind of the evolution of these things. Barry Anderson hosts the Traders Room every day, opens it up 30 minutes before the open. On any given day, there are literally hundreds, 400 or 500 people in there. Barry does a great job at showcasing his trading style and showing everyone how he uses and interacts with trade ideas. So the best thing about it, other than Mr. Barry, is the price, which is free, right? So if you shopped around trading rooms out there, you know that most of them that are worth their salt, they are not going to be free, but it's just one of the benefits that you get when you're part of the TI family. Of course, today is Monday. You get myself and Steve. Steve's going to take the helm on Tuesdays. Andy Linloff rides shotgun with him. Hump day comes around the middle of the week. We like to change it up a little bit. We bring in Dan, our CEO and founder, and our Chief Technical Officer, Brad Williams, always entertaining there. And Andy is going to round out the 5 p.m. Eastern webinars with the Trading Studio, and I ride shotgun with him. Now, come Friday, we do something a little bit different. Heck, I can't even remember how long we've been doing it now, Steve. It seems like a long time, but it's one
Many
of the newer
months.
editions. Yes,
Many
many
moons.
months. But it's a big hit, and it's just what we call the Friday free-for-all, more or less, from 11 a.m. to 2 p.m. Eastern. Basically anything TI related. If it's too complicated, we can route you to the proper individuals, but we can handle most of the stuff that comes in there because you got 4 brains on the topic. You got myself, Steve, Andy, and Sean McLaughlin in there as well. So once again, if you haven't signed up for that one, you might want to think about doing that. Okay, here. Now, in addition to the 5 p.m. Eastern webinars, we have recently begun the TI University series of webinars as well. 101 is on Mondays, 201 Tuesday, 301 Wednesday, and 401 Thursday. These guys start up at noon Eastern time, typically go about an hour and a half. All of the content is predefined, so we do recommend that you take these in order so that you'll be ready for the next one. So if you haven't signed up for these guys, very good idea, especially when you're new. Help you get over that learning curve as soon as possible. Now, whether you're a demo, or excuse me, whether you are a test driver or a regular subscriber, you know that we have AI technology. Matter of fact, we have the only AI available to retail traders out there. And we always like to show people how the crowd, in other words, our clients, are responding based on active subscribers. And you can see right here from this graph that as soon as we introduced Holly back in 2016, we've experienced explosive growth. The cool thing is, not only do we have Holly, but we have 2 additional Hollies. So we have a total of 3 now. So you guys are responding for a good reason, and we'll get more into the details of why the AI is getting such a warm reception a little bit later in the webinar. Now, This is the ebook that myself, Sean, and Andy put out not too long ago. Matter of fact,
Hey.
did I not say Steve?
You left me out.
Steve, Sean, Andy, and myself, we put together this ebook. We all contributed, basically our own different styles. Now, this is the time that we did release it. Can't say that we planned this exactly. A little bit of luck involved, but we have had some significant down days since the release of this book. And the content is, what do I do when the buy the dip stops working? Well, today was a pretty good testament to this book, and we're going to be covering some trades that are right out of this ebook today. So once again, if you haven't downloaded this book, you just go to basically our homepage /ebook. You can pull it down for free. Some great content in there to get you geared up for the short selling activities. Once again, we're going to have some prime examples of some short sells from today's session. All right, let's pull up the agenda here. So as always, we're going to let Steve take the helm in just a second here and let him talk about the overall markets, where we've been, where we might be going. We've got some great things to discuss as far as tempering our expectations for every session, what the compare count readings were after the first 15 minutes, Facebook, Twitter, things falling out of bed. So Steve, if you're ready, I'll go ahead and let you take it here, and we'll just address these topics as we come to them.
Sure.
And there you go.
All right. All right, welcome to my desktop. Hello, everybody. Yeah, Frank had a quick question about designing a scanner. We can do that. It's much better on Fridays. If you want to have it done in this type of a forum right here, we could probably do that for you on the Friday tech support, but on the afternoon webinars, we've got kind of a full chalked content plate as far as content goes. But as I said, info@trade-ideas, if you send in your idea, I want to see stocks doing this and this, we can try and help you, get pointed in the right direction for sure. All right, so welcome to my desktop. Got the spiders up ready for you. Of course, this is the S&P 500, the biggest benchmark that is used out there. First thing that came right to my attention is the pivot lines that I talk ad nauseum about. When I say prior resistance becomes future support, that's what I'm basically talking about. And so what we had was sloppy resistance back here, real tight resistance as we got there back in early June, and then as we came back up in July, we consolidated sideways, which is the most strongest way of consolidation where potential energy can come popping out. And then we did. We popped through, pulled back, rested on that orange line, and then went about our not all-time highs, went about moving through to almost all-time highs. That would be back here, basically. But then we ran into a little bit of foulness in FANG land. FANG stands for Facebook, Amazon, Apple, Netflix, Google. And I will add .t there at the end for Twitter. We'll take a look at those in a second. But the big red bars that we're having here in today's market is follow through from the same thing selling on Friday last week. Basically, what started it all was the earnings in, well, let me go back even farther. And I'll get ahead of myself here. I'm going to go to Netflix because I want to show something. This is what happens in a bull market when buy the dip just becomes something you literally do in your sleep. All right. Netflix was the first of the big guys in the FANG to have earnings, and the earnings weren't that great. But look at what happened here. The stock gapped down horribly overnight, and the conditioned mob, and I'm going to use that word politely, the conditioned mob decided to jump in and step in and buy, because that's what we do in this market. That's what's worked. Well, it worked that day, and then they realized that we couldn't quite fill the gap, and then the selling came back, and then boom, here we are much lower today. Well, again, I had said that, trying to buy bad earnings the very next day is not always a great method to try. It's one of my steady, fast rules of not trying to buy a bounce to the upside and long side after a stock reported horrible earnings, because it's going to take a few days to bleed out the weak hands and get the story out. And that was not being paid attention to back in Netflix. The crowd just jumped right back in. Okay, well, let's fast forward a little bit to Facebook. Whoa, here's the big drop. And guess what? They did not show up and buy that thing back because once bitten, twice shy from the Netflix debacle kind of translated into Facebook. And then we had Friday weakness and we even rolled over more today. I've been tweeting ad nauseum. There's a gap down here that needs to be filled more than likely. This is probably a short-term level that might be tested tomorrow on the open, perhaps. As you guys saw, a lot of times the open has the most volatile swings. But this gap down here is an open historical gap on the daily chart. And a lot of almanacs and trading say gaps were meant to be filled. And in this case, I think they're right. It's only been 3 days, and we've had some more follow-through. Let's go take a look at Twitter, even uglier. Friday was the bad news for Twitter, and did they buy the stock back like they bought back Netflix? Nope. They're starting to pay attention out there. That's not really the order of the day right now. More follow-through on Twitter. And by the way, just a sideline, this moving average here is the 200-day moving average down at 30, roughly 30.20. I think that's got a date with that level tomorrow, and we'll see if it bounces. We'll see if it holds. Even Apple. Now, Apple has earnings coming out tomorrow. Do you think these people in Apple here are nervous after watching Facebook and Twitter and Netflix all disappoint? Yeah, they are. And so there was a lot of selling in those stocks again today as well. Amazon had the right to at least brag about a gap up opening. They gapped up to all-time highs, but commenced to sell off and give it all back on Friday and then give back even more today. So the handwriting's on the wall, guys. The big FANG stocks, the high flyers, are not being received very well with their earnings. And I'll just finally add that Tesla, which is actually part of the trade of the week, it was a option plan B if you didn't want to go long the PM stock, Philip Morris. They're going to have earnings after the market on Wednesday. And I sure hope Tesla's priced to perfection because they've had some weird stuff in the news lately. Even the CEO, Elon Musk, has been acting really goofy on Twitter. And the idea of the trade of the week was, well, if you're adept at using options or to buy put options and make money as stock prices go down, it could be a nice way to limit your risk going into earnings. You buy a put option for a couple $100, and that's your risk. A couple $100. If it's gone, it's gone. If they report well, then they just bucked the trend of the entire last week. But if they report poorly and the gap down is huge, well, it's a way to use options to make money without so much gambling going into earnings. But I digress. That was my FANG discussion as to why the market has been selling off the last 2 days and showing up definitely here in the Qs, the NASDAQ laden ETF. And it looks like we pierced through that 50-day moving average, but popped back above just in time to close above that 50. So that's what the bulls will be watching tomorrow. I mean, really no harm, no foul in this chart when you look at it compared to those individual stocks. But as an index, this thing is given back 2 steps. 3 steps forward, 2 steps back. It makes all the sense in the world for the bulls to hope that we can dig in and build a higher base camp here and move higher. So that will be the order of the day for the next 2 days to see if these levels here can hold. Back to the S&P, it's the pivot line that I started talking about that basically we pierced at the midday and then bounced back up and closed above. So no harm, no foul, really. We didn't breach this level and close back above it. We're still above this level, but we've tested it a few times, and so that's going to be the level I believe the bulls will be watching going forward. Small caps, they're just breaking through a lot of support up here, and we'll see what tomorrow brings, but they're looking a little feeble, and they have been looking a little feeble going back to this day when the markets were strong. For some reason, the Russell 2000 small cap stocks took a beating. And then lastly, the Dow also, if we look at these lines from the past, tried to fight itself above these levels of resistance. We could even pull this down just a little bit, and it couldn't really stay above there, so the Dow has dropped back into no man's land here. We'll see if it can dig in and do like the NASDAQ and the spiders and build a higher base camp and move higher. So a little bit of, I don't want to say damage, because like I said, the market goes up 3 steps and comes back 2 steps, and that's what a trend does. And there's no reason to think that's been broken just yet. However, when we dig deep under the circle and look at the big high flyers, social medias, and the FANG stocks, they're looking really, really ugly. So I'm kind of expecting Apple to maybe not have great earnings or great response to the earnings they report tomorrow. And I'm also kind of thinking Tesla's going to have a rough time. Lastly, the trade of the week this week was Philip Morris, and it kind of did what we were hoping. The market was in a defensive position today. Excuse me, Philip Morris has a nice dividend. It's also been beaten up pretty poorly, had its earnings back here. A quick backtrack down to these levels of 52-week lows, didn't spend very much time there, popped back up. And somebody the other day in the Tuesday webinar asked me a question. They said, well, Steve, what looks to you a stock when it flags? Is it better if it flags going sideways, or if it maybe flags coming down a little bit? Or option number three, what if the flagging is kind of creeping higher? And I said, well, that one's the one to watch, because a lot of times when you see that flag slowly creeping higher after a nice move, I mean, it only spent 2 days going sideways, and now it's kind of creeping higher. It's almost like the train's trying to leave the station in a very surreptitious, stealthy way, and it did. And so that pattern, at least today, tomorrow's a whole new day, but at least today, that pattern followed through. This is a very nice basing pattern, and the trade of the week is going to be a long-term hold. It could take a few weeks to get up to the 100 level, which is the price target, but I'll talk more about that in my webinar tomorrow. The big takeaway today is, was it just 2 steps back, or is this the beginning of something else? I think we have to watch Apple's earnings tomorrow and Tesla's earnings on Wednesday and see if these markets, the Qs and the spiders, can hold these respective levels that they're digging into, the pivot level in the S&P and the 50-day moving average here in the Qs. And that is all I have, other than quickly just to show Twitter and the intraday why I like that 10-period moving average so much when stocks are in absolute momentum to the downside. In this case, we have a gap down on Friday. Look what happened. That line came down to join the price action, threw it down. Little bit of uncertainty here, but then back below and close. And all day today, the price had no business closing above that line that held the price down. So as soon as I see that 10-period moving average on the 15-minute chart start to abate and reverse, to me, that signals the momentum might be over. But who knows if there's a second or third gear that wants to start selling again in those names that I just showed you the remainder of this week. We'll find out. And that's it.
Very good, Steve. Very good. So can you hear me okay?
Yes, I can.
Okay, perfect. I don't know if you were aware of it, but my internet connection dropped. Fortunately, I got it back up.
Impressive.
And we're good to go.
Yeah, now I see the notes. Okay, I was on a roll there. I wasn't paying attention to anything. Tunnel vision.
Like, you gotta be kidding me, man. As soon as we get going, a big clap of thunder and everything went.
Yep.
Okay.
Thank you, David. Appreciate that comment. All right, back to you, Mr. Jamie.
Okay. All right, and you should be seeing the proper screen, Steve. Just let me know.
Yep, I see the slideshow and everything else.
Okay. All right, here we go. All right, so of course I kind of missed what you had to say, but
we'll say the FANG stocks are
mm-hmm.
the bear case right now. Other than that, the spiders and the NASDAQ, just 2 days of pullback. You know, we'll see what happens.
Absolutely, and we did have a tiny little gap up in the SPYs today, but of course that didn't last very long here. Let me go ahead and get rid of that post-market stuff. There we go. Okay, so back to it. All right, I was fast and furious there. I think I was sweating trying to get my connection back up. All right, so first and foremost, it's always a good idea to have expectations, right, about what kind of day we might have. Of course, due to Facebook and Twitter doing what they did last week, we kind of had a little bit of an idea of what could happen this morning. Of course, as we know in the marketplace, there's never a guarantee. But I tell you this, compare count readings on my big cap compare window after the first 15 minutes this morning, whoosh, 70% to the downside. Now in the past, we've seen this reversed many times. Can't say all the time, but we have seen those days where we have these huge buying biases going on. Well, obviously not today for many reasons. So as Steve pointed out, Q's got beat up pretty bad today. SPY, not looking so bad. I mean, a regression back down to this little support level, but we'll see what happens the rest of this week here. So this was our first kind of tell here, and let's just take a look at the SPY. What I have here, well, I had it on 15-minute bars, but these are 5, so let's just shrink it up a little bit here. 15. So after that first 15-minute candle, today, close with this candle, what do we have? We had a little sideways action and then whoosh, down to the levels that you see here before the bottom was put in. Yeah, Frank, the vault's a pretty good strategy. It's one of the new faves that's been making the rounds here lately for obvious reasons. No
By the way, I
clarified the color.
I clarified the color on that. I know you saw it, but I might as well share it with everybody else. When I first saw it, I thought, oh, the vault, a safe combination.
Me too.
It's not. I said, wait a minute. The way the way this one's working, it almost looks like a pole vaulter. So I asked Brad, what's the genesis of this name? Safe or pole vaulter? He said pole vaulter. So it's vaulting like a pole vaulter. That's
Yep,
the
yep.
genesis behind the name for anybody that
Hmm.
cares.
Good stuff, good stuff. Okay, so what do we have? We had the huge selling bias in the first 15 minutes with heavy volume. Of course, we had the Twitter and Facebook hanging over our heads from earnings last week, and then off to the races. Now, that's just the overall macro stuff. There were plenty of good short trades to be had today, and guess what? The setups were right out of the ebook, and we're going to get into those a little bit later here. Some really nice low risk short sells from my favorite windows that are listed in the ebook, and also jiving with the pattern that is displayed in the ebook under my section. But first, let's talk about the hollies here. Where there was one, now there are three. Holly Grail, the original, Holly Neo, or excuse me, Holly 2.0 that you can see right here, and Holly Neo, all were active today. Of course, Holly Neo, before we get into, Holly 1 and 2's trades, Holly Neo a little bit more aggressive, right? So on a day like today, not a big surprise to see that this one was down a little bit on 12 trades, where the old school girls today really got busy with Holly 2.0 kind of stealing the show with risk off of 319, and then Holly Grail following up with 2.52 points on 24 trades. But let's keep in mind these 3.19 points that Holly 2.0 generated were in risk off mode and only took 14 trades to get there. Yeah, Les, we will, myself, Steve, Andy, Sean, everybody up here, we're chomping at the bit for the feature that is in the development pipeline right now that will allow us to see all of the trades at once, because it is a little frustrating when you're on one unit, or one segment, I should say, but a really good trade is triggered on the other one, and guess what? You get back over there, it's already up 20 cents, and you're like, damn.
You know what's really frustrating?
Wish I would have been able to see that. Yeah, Bill, I'll move the slide here in just a second here.
That's frustrating.
Yeah. Okay. All right. Hey, details. So once again here, I am on Holly 2.0. So let's just dig into this one first. 14 trades total, risk on, up a little bit, but risk off stole the show today. I love this yield curve here, all right, because it's the classic formation. A little bit of a down draw while the positions are being added on, and then whammy. And also what I would like, not only the ability to view either a master blotter that is kicking out all the trades of all the hollies, or whether it's we can pull up each strategy panel and then divulge the blotter, but also too, the ability to start marking these charts up, maybe getting a little bit of an indicator once this equity curve pops above this level here, trading it just like a stock, a range break, so to speak, so that we know that crucial time when the traction begins to take hold, and that can act as a signal to us too on how aggressive or conservative to be when Holly, starts to pile the gains on here. Now, Holly 2.0, the majority of these, I can't say the majority, but we did have a nice short trade in here, a nice mix between shorts and longs. Now, these shorts finished lower than what we see here, but we're going to take a look at that max profit column here in just a second. But in the meantime, since risk off won the day here, we're not going to see a whole lot of risk on opportunity, because she was pegging those exits pretty well today. And if you've attended these webinars before, and for those of you who might be here for the first time, a little bit about the way Holly is designed. Holly is a statistical model, right? So everything that she brings to us each and every day has statistical probability assigned to it, right? So we've got that going for us. That is Holly's superpower, statistically viable entries. Now, a lot of the times we can make better exits than Holly because we're a little bit better at reading these charts. But boy, today she fired on all cylinders, because we look here at this first trade, which was the biggest winner, risk off, LCII. Let me just expand this chart out a little bit here. Beautiful entry right here, and then off to the races. right? She gets out at the top of this area up here. Let's see, 90.40, a buck 13. So, you know, pegged the exit pretty well. Left a tiny, tiny bit on the table. Well, how much did she leave on the table? Well, we can see right here, risk off profit a buck 13. If we would have stayed in it, we'd only be up 80 cents as of the close. But how much was the position up during the time that Holly was in it in risk off mode? Well, up here, it was up a buck 50, right? So I always like to take the opportunity to point that out because a lot of people let this column go unused when it really is quite the eye opener, right? So there was no risk on here. There's usually most of the time, but not all the time. And this will be very clear when we take a look at Holly 1.0. There is some risk on money to be had there, and we'll talk more about how to address that. So 113 versus 80, this short right here, which was also gorgeous and had a target profit target hit. Once again, right here, Holly calling the short at the blue line here, and then whoosh, this thing just released, went all the way down. Holly ends up covering it where you see the dark shaded area. That is her time in the trade risk off mode. She plucked $1 out of that because the target got hit, right? It was up a buck 06 at the most, so she only left 6 cents on the table on that one. If we stayed in that trade, tried to hold it out, we'd only be up 45 cents come the close. And then, you know, usually we're seeing a spread here between risk off and risk on, but not today. She was doing everything right today, even her exits. 55 cents on this little guy right here. You know, pretty impressive considering the market that was thrown at us. Let's just take a look again. This is what the market did most of the day. Nothing but down, down, down. And here we have some really nice gains, not only in a short, but on some longs as well. So let's do this now. Let's cruise on over to the original Holly. Populating here. Now, Holly original, a little bit more active today, up 252 on risk on, not that bad on risk off even. And then what do we have here? We have something very similar. This one just took hold a lot quicker. A little bit of a drawdown as she starts to open positions, and then, dude, this was just whoosh. I mean, it was just, I mean, straight up. None of this, you know, hemming and hawing around here. I mean, this thing just took off, right? And look, all long, except for how many trades here? 2 trades, all right? So here you have Holly 1.0 just not given any cares whatsoever to this down market, but putting on 24 trades and 22 of them were long and doing this well. I mean, that's pretty incredible. I mean, there's just no other way to slice it or dice it. Incredible. And plenty of opportunity here for risk on. So let's talk about risk on, risk off. It's not something that you pick before the day begins, you know. Especially new users will say, well, I see I can toggle here, you know, risk on, risk off. Do I have to pick that? We address this on a trade by trade basis. So PCMI. Oh, it's just, there's so much beauty in this place today. So much beauty. I mean, look how clean of a range break this is. It happens a little bit before, but man, once we see the entry signal right here and we see what just occurred in the prior 5 minutes, you know, it doesn't take a whole lot of thinking to just go up there and go F12, market buy, assuming the spread's not big, you know. Stop lining up pretty perfectly with what my human eyes would tell me. Okay, box, you can leave anytime. Hold on a second here. That little box was just, well, okay, it's gone now. But nothing but beauty in this entry here. And once again, not even one more pass through the entry line. It's like the stop loss isn't even here. We just go straight up, right? Now, we always know that on a down day, there's stocks going up, but finding those stocks, Not such an easy task. And then to have him go up in this fashion, even more difficult, you know, especially to a trader that doesn't have access to technology of this nature, right? So this is a great one to talk about risk on, risk off. Why did Holly get out of this trade right up here when it's just cruising straight up? Simple answer, because that's what she's programmed to do. Timed exit. Bullish pullback was the strategy. We can see that strategy was designed around an intraday hold time of 45 minutes. So profit target didn't get hit, stop loss didn't get hit. The trade was working the whole time, so she didn't prematurely pull the plug on a profit save or a reduced risk. So let's go ahead and talk about, you know, when you see here a profit save or you see a reduced risk, it's because for a very brief moment in time, could be 5, 10, 15, 20 minutes, the stock has stopped going in the direction that it was intended, right? It starts to go sideways. When we get sideways movement, she's a lot more apt to pull the plug. But this one was just a hard coding, right? Hey, 45 minutes is up, I'm out. But when we're in the trade and we see Holly getting out right here, and we're like, well, man, this thing's just going up, up, and up, hasn't even pulled back once. I think I want to stay in it, right? That's you, me, any other user out there making the decision. Okay, Holly, I see you getting out, but I think there's more meat left on the bone, so I'm going to stay in, right? Sometimes it can be a slippery slope. You know, the more proficient you are at reading charts, then the easier the decision becomes. But we can also look at the daily. What was going on in the daily during that period? Well, this line back here lines up perfectly with this area that could have acted as some pretty hardcore resistance. It got slightly past that and then took another run. So if we like what's going on in the chart, we can always go, okay, Holly, I see you're getting out, but I really like this, so I'm going to stay in. I'm taking more risk, and I get paid more. The easiest way to get used to this when you're a new user is to do a little bit of both. Peel out a half your position with Holly if you're not really sure, but you think there might be more on there. Keep the second lot and adjust your stop loss either A, to break even point, or keep your original stop loss. Now, if you keep your original stop loss, depending on how big the first gain was, then you're also putting that at risk. But if you take the money off the table with Holly on half, 30 cents, and you go ahead and set your stop loss for a break even to where maybe you make a penny, lose a penny, but in essence, shoot for a break even if it rolls back over and gets you out, you still made money on the first lot. That's the way I would recommend to any new person that's trying to get used to this technique, because you're not letting a winning trade turn into a loser. You're booking that profit on the first lot. You're taking the risk on the second lot. That is you going risk on. And that's a pretty juicy spread between 30 cents and 90 cents. It's not expected that you get everything, but even if you make 40 cents on the second lot, 50, 60 cents on the second lot, that is a big improvement over just making 30 cents. Now, this guy, even better, Nickelback, one of Steve's strategies, if I'm not mistaken.
Shows up every now and then.
Quarterback's more popular. Nickelback produced this little guy right here. You know, this one, you know, is a good winning trade, but doesn't look like this one. This one throws us a little bit of a curveball, whereas this one went straight up. Of course, most trades do throw us a little curveball. So we get in right here, we get a nice pop, yay, winning, back through here. However, that's why we have hard stops, right? A lot of the times we get in the money, we get out of the money, but we've still got that statistical probability on our side. Comes nowhere close to hitting our stop. Another 15 minutes later, and we're popping new highs, off to the races. So Holly, once again, if the trade is going against, or not going our way as quickly as she would like, then she has the ability to pull the plug on it. So we see here profit save. Well, nice job, Holly. Profit save of 0.00. But once again, we can override her and go, you know what? We think there's something left on here. This is why the stop is here. We're going to stick to it, right? So between 0 and 58 cents is the spread. And, you know, depending on if we got out up here, or decided to, try to really milk this thing. Big difference between making a flat and pulling 58 cents out of that trade. Would the daily have been much help on this one? Yeah, maybe. I mean, right at the top here, perfectly butting up at this little area right here, which could act as some resistance. But when we were down here, we're nowhere close to that. All right. So sometimes it's a lot more obvious, other times not. But that's the way we should address risk on and risk off, is from a trade by trade basis. And let's do one more here. Let's pick this one because, once again, one of the favorite new strategies, the vault, has been doing exceptionally well as of late. A profit save of 0 again, and 49 cents was on the table. So this is the other animal that we see. The first animal is this guy. Just goes straight up. We never have to worry about really anything. We saw this little guy make an appearance where we get in the money, come back down through the money, and on that second, third push, that's where the money comes in. And then this guy, which is going to sit here and bob and weave all over that resistance line, right? So we get long right here, we get the sideways action. This is when Holly is more apt to pull the plug prematurely, and we can see she did just that, right? She's like, I'm getting bored here. This thing's not doing what it's supposed to. I'm going to pull the plug on it. We get down almost to the stop loss, but no dice, right? Good trade. Stops never hit. Just had to be a little bit more patient on this one. So once again, we could have taken flat on Holly for one half. Of course, we're hovering right at the entry line. If it's well above that entry line, well, then we can use that as the stop loss, right? But if we're sitting here moving back and forth through it repetitively, it doesn't make a whole lot of sense to use that line as our stop loss. So in this case, we'd have no choice but to stick to the hard stop here. But once again, a nice spread between 0 and 49 cents. So we could keep going, but it's just going to be more of the same, right? Nice spread between risk off, risk on here. We got almost a 2x right here. And then we start getting into the smaller ones and the ones that, Holly made the best exit on. We can, once again, another target hit on the vault, right? Beautiful little trade, boom. And this is one of the ones that just immediately went. Pain-free trade. 15, about a little over an hour later, she's hitting her profit target and everything's fine and dandy. But once again, absorb the fact this was the market today. This is how Holly 1.0 performed, 90-something% long. I mean, I'm still kind of in amazement here over this segment, right? Because of this, right? Okay, I'm going to take one quick question here on Holly, and then we're going to move on into some other stuff here. Are the AI strategy trades independent? Are the AI strategy trades independent of which AI? Well, John, there are 3 different segments here. We've got Holly Grail, Holly 2.0, and Holly Neo. This one is Holly 1.0. All right. So I don't know if that was really the question. It was kind of hard to understand, but feel free to rephrase it later. We'll try to address it if we have some time left here. Now I'd like to go into some other things. That's Holly. That's all fine and good. That's our AI, one of a kind. But getting back to the ebook here and some nice daily setups that came from it today. So in the ebook, you'll note that I like the range breaks. Now, typically this market has been range breaks to the upside, and that first one that we just looked at here, that's a great example of an intraday range break to the upside. This little level right here gets cracked, the volume or whatever is good. We can see that this guy finished the day with a relative volume of 5.8, right? Holly found this one. But since today the underlying theme was down, well then I've got a great little alert window that I use for finding stocks that are going down with extremely high volume. So let's pull this little guy up first. And by the way, as I'm talking about these things, all of the windows that I use to pull these trades today are located in channel 4 down here. Not only are my favorite windows located in channel 4, but so are Steve's, Andy's, and Sean's. So any of the windows that I'm showcasing today, if you'd like to have them, you just go to channel 4, pop the window out, and save it to your cloud. All right, so SYY, check out the action here. We had a nice little swoon down. We had a little sideways action here. And as soon as this thing broke with high volume, then turbo breaks down, found the trade, right? Now pop this out to its own window so you can see the exact time that when I double click here, here indeed, the blue arrow is where you would have gotten the signal. So general rule of thumb, this was a very small consolidation time here. The more proficient you get at identifying these, the smaller ones look like something, but there are some better examples here. And of course, my travel computer is a little bit more crowded. Once again, we have down action. We have some little sideways flagging here. We can see right here, 7:33 my time, which would be 10:33 Eastern time. We get another signal here of HDB hitting a low, because if it's going to break that plane, it has to punch a new low. We can make an entry anywhere in this signal right here, or in this bar, this 15-minute bar, and if we're comfortable with the high of the prior 15-minute candle, I'll just draw a little line like so, then that's a good trade, right? Prior 15-minute bar, for wrong, this is our stop loss. We get the penetration right here, and then down, 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 right? One of the more simple patterns that you can hope to play in any market is a simple range break, right? And I'm going to be showing you guys a few of these, but man, they were all over the place today. So once again, ARRS, 15-minute candles, we get the swoosh down, we get the flagging action. As soon as that thing breaks to lows and breaks out of that little range right there, it's off to the races, right? Let's see here. I just double clicked on the wrong one. Now we're back on the right one. So we can see right here, 10:44 Eastern, 7:44 Pacific time. Nice, clean entry, and boom, boom, boom. If we were wrong, our stop loss would have been right up here. So what are we seeing here? We're seeing this is our risk area, and all the way down here is our reward area. And this is what we like to see, all right? Whether it's this one or this guy, we got risk area here, we got reward area here. Now, we had already had extremely high compare count readings. This is how the day finished. After the first 15 minutes, we were at 70. Never saw this guy capitulate, act like it was going to go back up. So that's what, these compare count windows, probably one of the more underutilized windows within trade ideas, but have some very good uses to them. And what I will say about compare count windows is this is just the way I like to use them. But hey, you're only limited by your imagination. What you end up thinking to keep count of could be something completely different. But just keep in mind, there's a reason why they kick card counters out of casinos, because they'll eventually take the house for money, and that's not what casinos are there for. RYAAY, down, flag, punch through, risk, right here. Reward, right here. Little risk, big reward area, that's what we like. And of course, it's not like we just said, hey, I think I'm going to go short today. We had the Twitter, Facebook news. We had the confirming huge compare counts on the open. And then we've got these beautiful short plays lining up like dominoes. I mean, it was really just a factor of you can't keep up with them all, but you will be able to see a few that make a lot of sense. So once again, this is right out of the ebook. So if you'd really like to familiarize yourself with that technique, which once again is one of the easier patterns to recognize, then just download that ebook, give it a whirl. Not only will you see my stuff, but you'll see some other really good shorting techniques by Steve, Andy, and Sean. Now, let's see here. I had some other ones queued up here because the one thing about the stocks that I've just shown you is if we look at the dailies, then we're going to be dealing with a little bit of range here. And so we're going to have to try to identify where the stock might stop. And I think that during my disconnection there, I accidentally closed some stuff. But if I did, I'm going to need to pull it back up because it's applicable here. All right. So we've got turbo brakes, which is just a standalone alert window, single alert window that I found all the stocks that I just showed you. But we've also got this guy here, which is the exact opposite of the one that I'm usually using, which is turbo up family, no resistance. The no resistance just implies that it's at all-time highs. Once again, Newt was a little stock that went up all day. And if we were trying to look to the left on the daily to figure out where we might run into some overhead resistance, well, there is none, all right? In spite of the market, this was also a little stock that was just going up today. And not only was it going up, it was busting out to all-time highs. So when we look over here, nothing to bump its head into. That's not a guarantee it's going to keep going, but it's certainly a nice attribute to have when you're long a stock on a nice cuddly intraday pattern. So this guy right here is the exact opposite. And I seem to have lost some of the things that I was going to show you guys. I had some predefined windows here. Give me a second. I'll see if I can find them. Well, I guess we're just going to have to eyeball these again. All right. I had all these blocked out so that I didn't have to come back and do this. I swear. They were just hiding. Hold on, I think I found them. Okay, here we go. All right. Not there. Let's see. Yeah, that was it. Okay. Eyes playing tricks. Okay, so here we have one UXIN, right? So here's the opening bar on the 15-minute candle. Once again, what do we have? The exact opposite of what we're used to seeing. We got the swoosh down and the flagging pattern. Now, once again, I'm only looking for these guys that have extreme volume. But whereas these guys that I was showing you have no resistance to bump into, these guys are not going to have any support, right? So we get the signal at $6, I believe. What's my time here again? 8:45, 6:42. Okay, so we're on the right arrow. We've got massive 1-minute volume as this $6 level is being breached, and 50 times normal 1-minute volume. It starts off right here. Oh, hold on. Okay, it starts off right here at 6 times. Well, guys, I apologize. I keep losing my spot here. Okay, there we go. So when we break right here at 6, we've got massive 1-minute volume, all right, 3 times or greater. Now, we don't want to chase too much, so this is a good example of, maybe halfway down, that's what I'd feel comfortable getting it, but we got the signal right here at 6. Now, once we're in it and it's working and we're thinking to ourselves, let me check it out over here, see when the stock might run into some resistance. Well, relatively new issue, and what do we see over here? We got nada, right? Once this thing was broken right here, I mean, it's pretty much into the void. So it's just the exact opposite of what we're accustomed to seeing with stock at all-time highs. There's nothing to catch it here. And once again, not a guarantee that something's just going to keep on going, but it's a very nice attribute to have on a short sell. Now, also, we had this guy. And that's not the right time. Man, I apologize, guys. I had this all lined up. There we go. Okay. So once again, signals right here, 801. We get it going right through here. If you're comfortable with that 15-minute high, since this is a short from the prior 15 minutes, we got the risk area right here. We got really nice follow through here. All right. Nice risk to reward once again. And when we look over here, this little guy is going to be having a hard time moving forward unless he can close back above this line right here. So a lot of the times, we have not seen a whole lot of these coming through, but this thing lit up like a Christmas tree today, all right? Because there are stocks out there hovering right at all-time lows, but most of the time you're not going to know about them, right? But they're out there. And this, this is a relatively new issue because this is as far back as I can go. But guess what, ladies and gentlemen? They're out there and they're just waiting and waiting and waiting. And when the market gets weak like this, they all start popping out, start making those fresh lows, right? So once again, that window is going to be located in channel 4 as well for anybody to go in there, right click, save to cloud, and you can have it. All right, Steve. So I see the questions panel has been pretty active. Looks like you've been
Except for the
knocking them
last
out.
one that came in. Whatever you were just demonstrating, Bradford wanted to, how did you pull up that screen with the history with volume breakdown, was his question.
Okay, so are we talking about the history right here or in the main window here? So whether it's the main window or whether it's this isolated window, because the reason I pulled them out here is because I don't want to have to scroll through here and find them all, be too cumbersome. But everything that we're looking at in these windows came through this window today. It's a multi-strategy window. So to view the history, all we do is we right click and we just check the history. For example, if I go all, it's going to show me everything that came through this window today. Now you might notice there's different colors. Well, there's green, blue, and yellow, right? Now, this is the same strategy in this window. It's just that I've segregated it by market cap. So the ones in green have a market cap of 4 billion and higher, like the UXIN. The ones in yellow, they are the ones in blue have a market cap between 2 and 4 billion, and anything with a market cap sub 2 billion is going to come through in yellow. So if I snap this back into real time, you're going to see it go back into real time and just push out the very last alert from each one of those strategies. Same way here. I wanted to show you guys where the signal times came through. So I popped them out and I pointed these windows only to that symbol for quick and easy reference. If that makes sense, Bradford. Right, Marco. We used to offer one-on-one training, but we're getting so many clients that we have to onboard and give attention to these days. We've replaced the one-on-one with the TI University webinar series and the Friday help support. And then, of course, these 5 o'clock Easterns are great ways to learn about the product as well. And Jerome is asking, is there a way to get history of the performance of individual strategies? Yeah, and that would be, what the back tester is for. Don't really have time to go into detail on that right now, but a quick little teaser here. The strategy. If I wanted to back test any one of these strategies in my multi-strategy window, I can just pop over here, hover over the strategy, and just say back test. Once we run the back test, then it will show you all of that information that you're referring to, Jerome. How many trades were generated? What's the winning percentage? What's the average winner versus the average loser? All that good stuff. You could run those scans in an alert window by using our built-in back tester. Of course, that's what Holly the AI is doing every night, but doing it on a scale that we couldn't even dream of doing, right? That's how she arrives at these statistically entries and strategies. Is she's back testing millions of trades every night, trying to improve upon the strategies. By the way, that's what the AI is. We taught the AI to use the back tester and then attempt to improve the strategies and re-back test over and over again. That is what the AI is doing. So just keep that in mind as you move forward. All right, time flies when we're having fun. We got about 3 minutes. Scott, if you're ready to come in and tell everybody how they can take advantage of the test drive coupon or the test drive code and save a little bit of money, whether they're going to be a new user or upgrade their membership, we are ready for you. Let me get my slide pulled back up here.
Yeah, thank you. So a couple items on the way out. We do have a podcast that comes out weekly, so make sure you're subscribed to that. Just search for Trade Ideas Podcast wherever you listen to your podcasts and add that to your subscriptions. And then you can get the last episode and the newest one when it comes out. Also, cruise through the archives and download some of those. We've got some great guests on there in the previous eps. We have a discount code available for you this month, which means it's good through tomorrow. Alpha Wave, 15% off your first month or year of Trade Ideas. Subscribers wanting to upgrade to premium can use that when you're doing the upgrade, or you can use that when you're starting off your new subscription. Keep in mind it's all caps, so you need to use all caps when you're entering that. If you have any questions, email us info@trade-ideas.com. You can follow Jamie on Twitter @QuantBot. Steve Gomez is @TodayTrader. Also have the @TradeIdeas handles. Facebook.com/TradeIdeasPro. Like us on Facebook there so you can share everything we post with your friends. Thanks, everyone. We'll have a recording of this later up tonight or tomorrow. And thanks, Jamie and Steve.
Hey, thanks, everybody. All right, we'll see what the market yields tomorrow. Everybody have fun out there and have a profitable Tuesday. Bye-bye.
See you tomorrow.